Let's talk about opening a position. Now, there are three things you can do to open a position. Now, there are three types of orders. You have to send an order to your broker using your platform. And you can send either a market order, a limit order, or a stop order. There are three orders that you can send. Now, yet this lesson is quite a simple one, but it's an extremely important one. And make sure that you understand this, because it is the core of trading. And if you don't understand the difference between the three orders and how to execute them, you will not be able to trade. No, literally, you will not be able to execute orders correctly. Let's move to the trading screen and I'll show you the three types of orders and how to execute them. And before we do that, I want to briefly mention that the execution of these orders might be just technically and practically a bit different platform to platform, and it is quite easy to do in with the Pro Realtime that I'm using, that I have recommended you to use. However, if you are using some other platform, that's absolutely fine, but you will have to be doing your homework on your own and trying to figure out how to use these different orders in your platform. And I will show you a different kind of platform, but it will be for a different market, for a Russian market. And we will talk about it a little bit later in a later chapter. And I'll show you how to use an order book correctly for placing your orders. Now, as for placing the orders in a simple trading screen in a chart without using the order book, not every platform allows you to do this, but Pro Realtime, of course, does allow you to do it. So let's move to the screen and I will show you the basic orders. So let's begin with the market order. So what is a market order? So you are basically telling your broker that you would like to buy or sell a product at the current market price. So this is quite easy to do. And in Pro Realtime, you have buy and sell, and MKT means market. So buy the market price, and you can see the price right here in red and in green. And there is 1 point difference between them, as you can see, and this is spread. And the spread is pretty much the price that you pay besides the commission to the broker for each of your trades. And the spread actually can be different. As you could see now, there was only 0.5 point difference, but sometimes the spread can be 2 points, 3 points. Sometimes when you're trading at night, the night market, the spread can be as ridiculous as 5 or 10 or 20 or 30 points, depending on the market that you're trading. And that's also one of the things that you have to watch out for, that your spread is kept to a bare minimum, because some brokers are as ridiculous as having, even for this simple DAX market, the German market, they have a spread of 5 points. And now if you're trading 10 times per day, 10 trades, that means that you're spending 50 points on just spread. And it is just pure insanity and theft from a broker. But we'll talk about how to choose a broker and the signs of a fraudulent broker and so on in later chapters. All right, so back to the market order. So as you can see, this is the reason why I always say that the market order is the most expensive one, is because there is a spread. And that's the reason why I like to use mostly the limit and the stop orders, because they theoretically tend to be cheaper, especially the limit order. But nevertheless, let's take a look at the market order. So as you can see, the price is somewhere around this area, and we would like to buy. So the market order is very simple. There you go, clicking it, and there you have it. So it opened, my stop automatically opened, and my take profit automatically opened as well. And to close it, I just click here, and we actually lost nothing except the commission to the broker. So it was a free trade for me, to just show you an example. And it is quite simple to use, and a lot of people trade in this way. However, trading key levels will be quite difficult and almost impossible with the market orders. The market orders I use in rare occasions when I trade indicators. When you're trading the indicator, you're waiting for the candle to close. Once it closes, you have a signal, and the opening of the next candle is your entry, as I've explained before when we were talking about the indicators. And I click buy or sell with the market order, because the limit or stop order, which I'll show you next, can be quite difficult to use with the indicators and this kind of trading. So write it down in your notebook that market orders are for rare occasions and only mostly for indicator trading. Now, the next type of an order is the limit order. And this is the one here, and it's written limit. And actually here is our stop order as well. Now, the limit orders and stop orders are quite similar, yet they are different. The limit orders are mostly used only for the bounce structure. And write it down in your notebook word for word. The entry with a limit order is only for the bounce structure. For false breaks and mostly true breaks, you will enter with a stop order. So most of my trades, 90%, are gonna be stop order trades, not limit order and not market order. But that's for the key level trading. And then on top, there will be some market orders for the indicator trading when we are going to be combining the two strategies that I do till this day and the way I trade with money till this day. Now, the limit order. So what does it mean for the bounce structure? So let's mark our level right here, just an imaginative one for the sake of an example of how to place a limit order. And then you have to click on the limit order right here. So, and this line will be, for example, placing it down here a few points, 0.5 points below the level. And this is the line, and this is the place of your limit order. So you've placed, here it is, your limit order at 13,122.5. And this limit order, it would automatically open a short position once the price comes to this level. So this is the type of order that is used quite a lot actually. And this is the fascinating way of trading. Simply because you've analyzed the market, you know what's happening, you have your strong limit player for the bounce structure, and you've calculated your risk, for example, your stop and the amount of take profit, and you've put it into your either like you have it right here in the Pro Real Time, where you can actually adjust your stop in an easy way, and as well as adjust your take profit in a really easy way, and then it automatically will open now with all of those measurements if the price comes to the level. As you can see, it did come to the level, but our limit order was not taken, and here you go. So it was just taken, and you can see how it's working. And now if the market moves down, we will be quite happy, we will be making money. So this is now, as you can see, it's moving against us, and our stop as well automatically has opened with minus 100 euro if with minus 4 points. If the market comes to this level right here, we will the trade will close automatically, and it will be actually a stop order. This one here is a stop, so it is a stop order. And actually a lot of people confuse the stop order and the stop itself, and those are two different things. The stop itself is something that limits your amount of risk, but the stop order is just a type of order, and the stops are often are in the shape of stop orders. So that's very important to understand the distinction and the difference between the two. Now, if the market moves down, here is going to be our limit order for closing. So the take profit here with 300 euros or 12 points will be a limit order. So that's quite an interesting thing. So here we have our entry that we did with our limit order. Here you can see the buy stop. So this is a STP, the stop order, with which the trade will be closed, our stop. And then here is our BLMT, buy limit. So this is a limit order that will close our trade as our take profit. Now that's to close it. You just, in Pro Real Time, you click on the cross and you close the trade. So you pretty much, with the limit order, we actually just sold something, so open the short position, and to close the position, well, you can do it with a cross in the pro real time, but in reality you are buying something back when you're closing your short position. Now it is a lot simpler to use and you can use it in a lot more detail with an order book, and that I will show you later on in other chapter how to use an order book and what kinds of order books there are, and you can actually place your limit orders or stop orders right into the specific prices, into specific windows and small brackets as to whether you would like to sell or buy something. Now, in this lesson, we are using just the trading screen and the chart itself and using it in a very, very basic way. Now, the next type of order is the stop order. Now, how is it different from the limit order? Well, a limit order is a one-step order, so when you place it into the order book or into your chart in the way that I've just shown, it's going to show up in all other traders' order books, and they will be able to see that there is an order waiting to be fulfilled. So it is just an order that everybody can see with just one step. Now the stop order actually has two steps. The stop order is becoming a market order once the price is reached of this orders, the level. So for the very beginning, when you place the stop order, and let's do it right now. So if the price comes down to this level right now, back here, then our stop order will be taken, and here will be our buy limit, so our take profit, and will be our stop. Or we can actually place our stop order above, and that this will be for long for buying, and this here below the market price will be for short for selling. So you can see the difference. The take profit is on the top, the take profit is on the bottom, and that's pretty much how it works. So you cannot have a stop order, and there you go, we just opened a position for falling, so a short position with a stop order. So there were two steps to this order compared to the limit order. The limit order right away is executed, but the stop order first is converted into the market order and then it's executed. And that's pretty much the difference. But in the simple words and in the simple world, all you need to understand is that when you have, let's close this one with minus 3.75 euro, who cares? Now, the only difference is that there is a market price that you can see right here, which is happening right now. And with a limit order that we just clicked, when we place the limit order above the market price, we will be opening a short position when the price comes to this level. When we're putting our limit order beyond the market price, the current market price, it will be opening a long position. So you cannot have a limit order beyond the current market price for opening a short position. To do that, you'll need a stop order. And so in the same way, the stop order, having it above the current market price, will open the long position, and beyond beyond the current market price, you will have a short position, and above you'll have a long position. So the stop orders and the long and the limit orders are working in opposite ways. So, and this pretty much is the difference between the market order, the stop order, and the limit order. And it is quite simple to use. I know that it might sound a little bit confusing, but all you need to know that market orders are executed instantaneously with the current market price, and those are going to be used primarily for indicator trading, for both pure indicator trading and in combination with other trading tools and approaches. Now, the limit orders will be only for the bounce structure, so nothing else. And mostly, well, the limit orders will also be for your take profit, but that will be automatic, and you will see that either in your order book or in your chart here in your trading screen. And the stop orders will be for everything else. So pretty much 90% of 80-90% of trading will be done with stop orders for true break and the false break. And as you can remember, as I've said before, I recommend and do myself trade mostly around 90% false breaks and the structures of false breaks in combination with indicators that we'll talk about in chapter 11. And therefore I trade mostly just stop orders. And that's all you need to know. Don't go into depth of why it is the way it is, why you cannot open a limit order on some kind of other side of the current market price and so on. All you need to know: market order for indicators, limit order for bounce structure, stop orders for everything else, such as false break and true break. And once again, I will show you how to use the order book and how to execute orders correctly in the order book. And I do mostly use an order book for my trading, and I will show you the concept and how to use it properly in a separate lesson. Now, this lesson is coming to an end. Please don't forget your test. As always, it's not like you can forget it, but I have to remind you of the test. And enjoy your homework. There is, again, some homework, but it's a fun one. So enjoy it, and I'll see you in the next lesson, which is going to be actually the next chapter. So see you in chapter 9.